Today, the rupee slumped to a new record low at 79.37 per rupee. Remember, even on Friday, it was a record low at 79.04 rupees. But now the rupee has gone down even below. Now, one of the reasons that's taking down the rupee is a widening gap between the value of our imports and our exports. We're importing a lot more than we're exporting, and that trade gap went up to a record high in the month of June. Another reason is a record foreign fund pullout. Foreign funds are leaving the Indian economy and the Indian markets, and that is one of the reasons that's taking down the supply of foreign funds in our economy. And of course, as we know, the basic rule, when the supply of anything goes down, the demand, the price for that goes up. So when the supply of foreign funds is going down, their price is going up against the rupee, and that's what's taking the rupee down against the US dollar. Now, with this, the rupee is in fact actually inching towards the 80 mark. It could soon be around 80 rupees per dollar. That's what experts are telling us, that in the next few months we could see rupee touching 80, and it has weakened by 42 paise today to end at 79.37 per dollar. And with this, the rupee is down by 7% just this year. Imagine that in the month of January you could get a dollar for 74 rupees, but now you need over 75 rupees to equate a dollar. Now, falling rupee is also driving up the cost of all our imports, all our foreign travel, our foreign education. The cost of all of these things are going up with the falling rupee. And if we get you an example of how much more it's going to cost an Indian student to go abroad, to go to the United States to study, if we can get you an example, this is an example of Boston University. Their cost for 1 year, their total cost, including tuition fee, the food cost, the accommodation cost, and other expenses such as your books, your laptop, all of these expenses combined still cost $83,000 for the current academic year. Now, if you were to pay for this in rupees in the month of January, you would have to pay 61.2 lakh rupees, but now you have to pay 65.6 lakh rupees, as of course the rupee has gone down. So we now need to pay more in terms of rupee for every dollar. So this has led to an increase of 4.4 lakhs in just the education of 1 year at this university that we're taking as an example, Boston University, university that attracts a lot of Indian students. So as the rupee has gone down 7%, the cost of education in this university and many other, in fact, all US universities has gone up around 7%. You now have to shell out over 4 lakh more for your study for 1 year at an average United States university. So the rupee going down has actually taken up the cost of foreign education, foreign travel, all our imports. We already know that the cost of Brent crude has already been going up. It's currently trading around $111 per barrel, but now with the rupee going down, it's now going to cost us even more in terms of our currency. So we could see that the rupee going down is going to add pressures to our inflation as well. Now, if we get you the trade deficit that we were talking about, the import value of our total imports in the month of June exceeded the total value of our exports by $25.6 billion. So that essentially means that we paid out $25.6 billion more than we actually received from our exports. So that's one of the reasons that's driving out the foreign funds out of our economy and driving it out a lot more than we're actually getting from exports. But on exports, it's important to mention that the rupee going down is actually a good thing for exports, because our exports get more competitive in the global markets. Imagine this, a foreign importer now has to pay less in terms of their dollars to import the same amount of goods in India, because of course their currency has increased in comparison to rupee. So this trade deficit is one of the reasons. It has doubled from June last year, and crude oil, coal, gold imports, all of these reasons are driving up the trade gap, the gap between our imports and exports. Now, to understand where the rupee is headed and is it really concerning, how alarming is this rate, we have with us Anindya Banerjee, who is the VP Currency and Interest Rate Derivatives at Kotak Securities. Sir, my first question to you, how alarming is this rate of 79.37 rupees per dollar? How are we performing against our peers? What's your assessment?
Right. Thank you for having me here. The Indian rupee is definitely at a fresh all-time high against, all-time low against the US dollar. But we have to look at a couple of more data points to get the complete picture. For example, the Indian rupee is not, let's say, depreciating in isolation. So other currencies around the world are also depreciating because one, there is a recession fear all over the globe. Second, the Fed, the US central bank, is hiking rates at a rapid clip. And third is that there is a lot of concerns about the Chinese economy. So all of these have actually hit entire emerging market pack and even the currencies in Europe and Canada as well. So if I compare the Indian rupee against a basket of currencies, Indian rupee is a slight outperformer if we compare the data from end of last year. And if we compare the volatility of the Indian rupee, then it is one of the least volatile currencies in the world. Now, the question might come is, why is it so? It's because RBI has been aggressively selling dollars over the past 6 to 8 months. For example, since October of last year, the FPIs have sold close to $36 billion, equity and debt combined. Now, the $36 billion of sell, if in any other time, would have caused a far bigger depreciation of the Indian rupee. But it didn't happen this time because RBI has supplied dollars significantly through the cash market, through the derivatives market.
Right. So you're saying the RBI is sufficiently intervening, and that is what, in fact, is controlling sort of this slump, and it's making the rupee perform better. But do you think now, with this really sharp slump that we're seeing, the RBI probably needs to scale up its intervention, perhaps sell even more dollars?
Here one interesting point is that the forward premium, which means that Indian rupee trades at a premium when we are talking about delivery at a future date. The reason being that the interest rates in India is higher than America. Now, this forward premium is a very important thing, and it basically gives us a cushion against any speculative attack. Because if somebody has to sell the Indian rupee, they have to pay this forward premium. Now, the forward premium is trading at the lowest level since 2011 and 2012, which means a 10 to 11-year low. Now, when you have such a low forward premium, what happens is that any untoward incident in the world, like today, the euro collapsed to the lowest level since 2002. Such things have a far bigger impact on the currency than otherwise. So yes, the RBI has to come in quite aggressively on days like this, and they are. And that's the reason why even today, the Indian rupee has depreciated, but not by a significant margin.
Right. So you're saying it's not by a significant margin. It's better than what most other countries are performing like. But what's your assessment? How low could the rupee slump in the next, let's say, couple of months? What's your estimate?
Assuming that this trend in the dollar will continue, because such trends don't really change overnight, because these are macro trades. So we could see even the Indian rupee get as high as 80.5 against the dollar over the next 2 months or so.
Right. So that is concerning. But as you say, we're still better performing than our peers. So also another question about till when will this slump last? When could we finally see the rupee recovering, if at all? Do you expect it to recover anytime this year?
Yes, of course, because what's really happening here is US economy has been immune to the global economic slowdown. But now when we are looking at high frequency data from there, it's clearly indicating the slowdown is starting to have an impact, especially in the housing market. And once the US housing slows, it slows the entire economy down. So we expect that over the next, let's say 3 to 4 months, we will see a significant deterioration in the US economic data, and which will make the Fed less aggressive. And that's the turning point, which may come for emerging market currencies like the Indian rupee. But
will the rupee recover back at the same rate that it went down with?
No, that really never happens, because if you look at the historical trend, so in 2020 when the COVID crash happened and the Indian rupee went from 72 to let's say 77, when it appreciated, it was not allowed to appreciate much, because RBI then comes in and start buying dollars, because they have sold a significant amount of their reserves over the past 6 months. So they would be there in the market, basically replenishing it. So we won't see the kind of appreciation which we would see in other currencies when we look at the rupee. So it has depreciated less.
Till what rate do you think it could come back, let's say by December? I mean, just for our viewers who might be planning their education, planning their travel for the future and their expenses, just for them, when do you think we could maybe get back to rates that we saw in January of around 74, 75 rupees? Or do you think that's never going to be a reality again and maybe 80 is going to be the new normal?
No, I don't think it will be going below 77 in the most optimistic case for the entire financial year.
So 77 is the best case scenario for the rupee's recovery. That's what you're saying.
Yes.
All right. Thanks very much, sir, for joining us and getting us all those insights. So he is sort of optimistic. He's saying that Indian rupee is in fact performing better than the peers and it might start recovering by the end of this year, by September. And we could see the rupee getting back to around 77 rupees per dollar in the best case scenario. But it's still concerning as the costs go up, the cost of our foreign travel, education and imports, all of that go up, Maha. So that's one of the concerns. And of course, we'll keep tracking the rupee. But today it's been a sharp slump and it's a new record low at 79.37.